Look, also a bit of action just as far as M&A today, and that has come as far as our stock of the day. In fact, a consortium led by Transurban confirming this morning it will take full control of Sydney's WestConnex project, snapping up the remaining 49% stake from the New South Wales government in a deal worth more than $11 billion. Shares are in a trading hold at the moment as it launches a $4.2 billion equity raise to pay for its part of the joint purchase, which it won alongside the Canada Pension Plan Investment Board, Abu Dhabi Investment Authority, Australian Super and a Canadian-based institutional investor. And Transurban saying it expects to get more than $600 million of potential capital release from the increased stake, which gives the company a total dominance of Sydney's toll road market. In fact, back in 2018, Transurban beat a rival bid led by IFM investors for the initial stake there, with the consortium acquiring 51% interest in the project for $9.3 billion. So what does this all mean for investors? Francesco, what are your thoughts? Because, look, essentially it's going to control all of Sydney's toll roads, except, I guess, the Harbour Bridge and the Harbour Tunnel, with the potential, I guess, of the Western Harbour Tunnel to come.
Yeah, look, Transurban's a company we've liked for a long time at Minnett. We currently have a buy recommendation on it, and look, that's more or less a long-term recommendation for those investors that are looking, at their super funds in particular. These are great assets to have for long-term investors. Where do you find a business where traffic numbers increase year on year, toll prices increase by CPI plus a margin on top of it? So that side of the coin is I suppose room for growth, if you like. And on the cost side of things, they're very good managers of toll roads, particularly mature roads. Obviously, WestConnex is not necessarily a mature road, but they've got great experience in that, and particularly they own half of it already. Look, the capital raising. They're raising $250 million through Aus Super at $13.07. The retail entitlement offer is at $13 or 1 for 9. At this stage, look, it looks like a good deal for shareholders. So I like the business. I think it's a good buy for long-term investors, and I'd be taking up the entitlement at this point in time. We tend to leave taking up our entitlements for the last sort of week leading into the closure of it all, because you don't know what can happen with the market between now and then.
All right, okay, so that's you maintaining your buy recommendation on Transurban. David, your thoughts? I thought we were supposed to be getting out of our cars into public transport, but it doesn't seem to be the case, does it?
No. And in fact, just jump in on David before it starts. If you look at with COVID, obviously traffic numbers fell off a cliff with lockdowns and restrictions, but it is one area which will get back to normal or close to normal very, very quickly, where things like airlines will take some time.
All right, okay. So David, your thoughts? Do you see that growth?
Yeah, look, I'm not so bullish on the growth aspect of it. It's more, this is more just an income stock, and it has been for a while. It's, as Francesco said, it's good for super funds who want a long-term income, and the yield's around 3%. But and it is pricing with as Francesco said, with the CPI increases, which is a benefit. But look, I'm a bit cautious about the debt credit markets, and I think that most brokers out there, from what I read this morning, are pretty lukewarm on this. It doesn't necessarily mean I won't take it up. It's a 1 for 9 entitlement offer to shareholders at $13, so I'll probably be taken up. But it's not. Look, it's not a buy for me. It's not. I'm looking for more growth, and again, I'm a bit cautious about interest rates going forward in the future. And infrastructure stocks like this can be hit pretty hard if we see a surge in rates for whatever reason going forward. Regardless of, even just with what's going on in China, in the debt markets, you could see a sharp rise in bond yields. So that's the thing I'm a bit cautious about at the moment. So I'm not a buyer myself, but I can understand for shareholders taking up the offer at $13, which is 8.3% discount to where the share price closed on Friday is probably a good deal.
So would you be happy to hold it?
I think so. As a shareholder, yeah. You'd look at taking it up closer to the deadline, it'd be a hold.
Okay, that's a hold from David and a buy recommendation from Francesco.